What's going on, everyone? Happy Sunday. So Thursday we alerted into some lotto puts. Those worked out beautifully. And then over the weekend I didn't alert anything because things looked pretty interesting. All right, it could have basically went either way. I do think we could technically fall a bit lower, but everything was basically at support on Friday. So in today's video, I'm going to cover my thoughts for the week. I'm going to go over the SPY, the NASDAQ, the IWM, the 30-year bond. We're going to talk about the crypto markets and the large tech stocks to really put everything together and get a whole view of the market in general. All right, so without further ado, let's get started with the video. And before we continue, I post all of my trades live, completely free on Twitter. I post all of my ideas for everything live, really. So you could go ahead and follow me here. And of course, if you enjoy the content that I'm posting here on YouTube, make sure to follow, make sure to, you can't follow on YouTube, but make sure to like, make sure to subscribe, and put on your post notifications. All right, so here is the SPY. So a few things are really coming to mind automatically. Number one, obviously the RSI, you can clearly see that the RSI is falling, right? The other thing that is a bit weird to me right now is that the blue MACD line that we can see here is moving upwards, yet the price is breaking levels of support and moving downwards. So this could be very, very devastating. Essentially, if 427 doesn't hold on the SPY, we can easily come back down to 420. But yeah, essentially 427 is going to be a very, very major level of support on the SPY, because the blue momentum indicator moving upwards like this should translate into strength on the stock price itself. And the fact that this isn't happening means that it's basically decoupling from this momentum indicator, which is showing a lot of weakness. All right, so just keep 427 in mind on the SPY this week. If that cracks, 420 is definitely going to be retested most likely, and then we can end up falling even lower. All right, so be careful with that. The RSI is already showing that we're falling. And another thing is that the RSI is really barely falling, even though we had a pretty solid move to the downside here. So it's not looking the best, right? So, but we are going to we're going to take our shots in intelligent ways and with, high conviction, high quality plays. All right. And especially right now in this environment, I'm not as comfortable buying at levels of support. I'd rather only buy right now on breaks of resistance. The only time I would buy at levels of support is if we really, really capitulate, like we basically did over here and like we were doing over here. That's when I would feel more comfortable. But right now, if the SPY falls to 427, for example, I wouldn't feel comfortable just buying at 427. I would rather see a close above these two levels here, above 433.34 and 434.74. Okay, that's when I would feel more comfortable buying in. Right now, it makes sense to be swinging short, but over the weekend, really anything can happen. And there's that for the SPY. There's not much else to really talk about. Overall, this looks pretty bearish in terms of the indicators. All right, and until we get a close above these levels of resistance, then there's no real reason to start heavily going long again. All right, so there's a SPY. Let's take a look at the Russell 2000 IWM. All right, so the IWM also looks pretty bearish. It failed at this downtrend line. It failed at this fib level, the 200, right? The 200 price at the 38.2% fib. And take a look at this blue MACD line. We were at 1.88 on Thursday, and then we dropped down to 1.86. So we only fell 2 points on the MACD, yet we had a huge move to the downside recently. So that means that there's potentially a lot more room to the downside. If we only moved from 1.88 to 1.86 with a huge move to the downside, that is basically telling us that there's a lot more downside potential. So the IWM currently looks bearish in terms of this momentum indicator, in terms of us failing at resistance, and as well as the the fact that the RSI is also moving downwards here. All right. So 195.50 is going to be a very important level of support. And of course, you know, if that breaks, then we're really going to, things are going to get really interesting. We can probably come back and retest 190 to 192 very, very quickly. But the one thing that is good is this Bollinger Band level is moving upwards. And that's really the only sliver of hope here, because when the lower level, so essentially the Bollinger Bands are standard deviations away from the 20 exponential moving average. So the fact that the lower standard deviation is moving upwards, it means that there's less room to the downside. Of course, we've seen many, many times that this standard deviation does get breached to the downside, but if you've been following the channel long enough, and if you've been here for a while, you guys know that we love to buy into extreme weakness. So either way, it's pointed towards like eventually a good dip buying opportunity, in my opinion. So those are the levels for that. For the support for the IWM tomorrow, this downtrend level and the 38.2% fib coincide perfectly at 200. So 200 is going to be a very major level of resistance on the IWM for tomorrow, and then of course 201.50. So if those two levels can break above, and we're above those levels at the close, and then the rest of the indices also look strong, then it would make sense to start going long overnight. But until then, we're really in no man's land, and anything can really happen. So there's that for the IWM. Now we should definitely take a look at the large tech stocks, the 30-year bond, and the NASDAQ. All right, Apple, I mean, clearly this is looking very, very bearish. We failed and broke below this level of support. The MACD is still moving upwards, yet we're having huge moves to the downside. This isn't a good sign. And the RSI is already showing that we're moving downwards, right? So the important level of support for Apple tomorrow is going to be around 160.30. If that level breaks, then, you know, we can easily come back down to 157 and we can just continue falling. But 160.30 is going to be a very important level of support for Apple. All right. And of course, you know, the same level, 163.76, is going to be the level of resistance. But overall, just want to quickly show you that Apple looks very bearish. Microsoft also clearly looks bearish. The MACD is falling, which is a good sign. The Bollinger Band is falling lower as well, which means that there's a lot more room to the downside. Whereas we saw on the IWM, the Bollinger Band was increasing. Microsoft's Bollinger Band is falling, so that's not a good sign. Also, the RSI is also falling. So, and we broke down below 290, so that's another, you know, that's not good either. Microsoft looks bearish. Take a look at Amazon. Amazon also looks bearish. Clearly, you know, we're falling. The MACD indicator is very, very tight still. But when the MACD is basically parallel like this, that is pretty scary, usually. You could see that the blue MACD line and the yellow MACD line are basically moving downwards in unison. That means that there's a lot more room to the downside. So, usually. So, of course, if the other stocks end up bouncing, but Amazon currently does not look like the best setup right now. So Amazon also looks bearish. And let's take a look at Google. And Google also failed below 2660, broke down below support. The MACD is also starting to fall a bit lower, which is good. The RSI just started to fall lower. So you can see how much more room there is to the downside for Google and for the MACD, or for the RSI and for the MACD. And essentially, you know, 2550 is going to be a very, very key psychological level moving forward on Google. 2600 and 2550. So, yeah, all of these stocks look very, very garbage. Well, bearish in the short term. And Tesla also looks pretty bearish. The RSI here is stagnant, which is not a good sign. It means that there's a lot more room to the downside. The MACD is also falling. We broke down below support. So again, all of these large tech stocks, the reason why I share this is because all of the large tech stocks worth trillions of dollars combined when all of them don't look bullish, then it's a good indication that the rest of the market is not going to look bullish either. All right. So all of these stocks clearly look very, very bearish. All right. So now that we covered all of them, it's important that we go over the 30-year bond. So clearly now the 30-year bond is the one thing currently that is showing a lot of strength. All right. So this in and of itself is not a good enough reason to go long, because we've seen time and time again in the past few weeks that when the bonds are showing extreme weakness or extreme strength, it's not an automatic buy signal. Okay, so we need to see equity prices moving in confluence to the strength of the bonds. And when the 30-year bond goes upwards, the NASDAQ tends to go upwards as well, because this is basically an outlook of the long-term outlook of the NASDAQ stocks and like the growth related stocks. All right, so the bonds skyrocketing like this, we need to see a translation of that strength into Bitcoin as well as the rest of the stock market. And currently, that's clearly not what's happening. So, this is a really good sign, though. This is starting to be a very, very good sign. We can see that even though the bonds are breaking above levels of resistance, the MACD blue indicator is falling. So that is ridiculously strong. So that's a very, very good sign. Now we just need the NASDAQ and everything else to really start popping upwards and follow the strength in the bonds, and things can get really, really interesting for like a strong short-term bounce, especially because this week we don't have the Fed meeting. So this week can be a really, really interesting week for the stock market in general. We can have like a nice little bounce and everything if everything persists, and if the bonds continue showing strength, and if like, you know, the equities and Bitcoin show strength, this week can potentially be really, really bullish, because next week on Wednesday is going to be the big meeting that everyone has basically been waiting for. It's going to be when Fed basically essentially changes everything. So this week can be very, very interesting in terms of like a bounce in equities, and then next week maybe not so much. So the fact that the bonds are moving up like this, hopefully we can start seeing some strength in the equity price and then start buying into that strength instead of trying to catch falling knives, right? So the bonds clearly look very, very strong, and that can be very, very bullish for the NASDAQ in the short term. All right, so there's that for the bonds. Now let's go ahead and take a look at the NASDAQ. The QQQ clearly looks very, very bearish. We closed below this very, very important zone that I like, the 338 to 341 level on the NASDAQ. Closed below it. Now we're basically retesting this 334 level, and we can see that the MACD is falling lower, barely falling lower. But we can see that the RSI is also really barely falling also. It means that there's a lot more room to the downside for the RSI as well as the MACD. And you know, ideally I want to see a close above 340.76 on the NASDAQ. That would be a bit more, not even 340.76, 341.31. I want to see a close back above Friday's high to see if there's actual strength in the market to swing overnight on Monday. And until that happens, still, you know, we have to lean bearish until we see a definitive close above any sort of levels of resistance. All right, because at the moment, SPY looks bearish, all the tech stocks look bearish, the IWM looks bearish, and you know, the NASDAQ also looks bearish as well. So you know, it's tough to be bullish until there's a reason to be bullish, right? All of the indicators on everything also look bearish. So we just need to see tangible closes above important levels of resistance before we change our bias. All right. So truly there's that for the NASDAQ. All right. There's not much else to really talk about. The other important thing essentially that we really need to talk about is Bitcoin. All right. So let's go ahead and take a look at Bitcoin. Oh, and before we go over Bitcoin, I want to show you guys the international markets. So this is the Hang Seng, which is the Chinese markets. You can clearly see things are falling very, very heavily. but the Bollinger Bands are also falling very sharply, which means that the lower standard deviation away is only getting lower and lower, which means that it's going to take a very, very aggressive move to the downside for the Hang Seng to get overextended to the downside. All right. You can also see that we just barely became oversold on the RSI, and this MACD is not even facing downwards. So that is very, very bearish for the Hang Seng. Taking a look at the Nikkei, which is the Japanese markets. Huge red days. The RSI is barely pointed downwards, which means that there's a lot more room to the downside as well. And the MACD is only barely moving downwards as well. This also looks very, very bearish. The FTSE is very, very overextended to the downside outside of the lower level of the Bollinger Band. So if we could get a bounce out of the FTSE, which is the English market, that would be pretty, very interesting because we are so far overextended here. And again, like this applies to the FTSE as well. When we are this overextended outside of the lower standard deviation away from the Bollinger Bands, there is a tendency to have a bounce. So we have to see if that can happen. And if we see bounces in the overall markets, the international markets, that can be good for Bitcoin. That could be good for our markets as well in the US. So the FTSE also falling, but it's very, very overextended now, which is a good sign. And of course, the DAX is also falling as well because of everything that's been going on in Europe. And so if the DAX and the FTSE can start to bounce, that can translate into some strength for our markets and for the international markets and Bitcoin as well. All right, so now that we get a clearer picture of how weak the rest of the markets are internationally, but the fact that the FTSE and the DAX are very, very overextended, that could mean that we see a bounce soon in the US equities, only purely based off of a bounce in these markets as well. All right. So there's that for those markets. Let's take a look at Bitcoin. So Bitcoin is not looking the most bullish. All right. And I'm sort of glad that we didn't swing anything over the weekend because of this weakness in Bitcoin. We failed at the 39,600 level. Now 38,000 is going to be very, very important level of support for Bitcoin. We can see that we already came and retested that level today. So we need to see if that level holds. And the only issue now is that the RSI is looking very, 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 very weak. And this is not the best sign for Bitcoin. It means that 38,000 can still break below as well. And then, you know, for tomorrow, the main important level of support is going to be this trend line here, which is going to be around 37,000. We can already see that the RSI, it's basically stagnant and barely moving to the downside, which means that there's a lot more room to the downside, even though we had huge red days recently, right? So that's not good. And the other thing is that the MACD is also just starting to fall below as well. So yes, we are oversold now on the MACD on Bitcoin, which is good, right? It means that eventually we will bounce, right? Whereas on the other markets and everything, so we're oversold on the MACD, right? But looking at Bitcoin, we're over. The other indices, the blue MACD line is above. So we're overbought. But Bitcoin, we are oversold, which means that we can easily see a bounce in Bitcoin. But essentially, we need to see if these levels of support hold. So 38,000 and then 37,000 need to hold. If those levels don't hold, we're going to most likely come back and retest 35.4. And it's very important to look at Bitcoin's strength because it's a 24-hour market. It gauges the strength overall in the correlation between Bitcoin and the US markets has been very, very strong. So the fact that Bitcoin is falling over the weekend is not a good sign. So we need to see if Bitcoin can start showing some strength, start breaking above 39.6, start breaking back above 40,000, and then that would be a good sign that the SPY and the rest of the markets can start showing strength as well. But currently, everything is showing weakness. The only good signs now are the fact that the bonds are showing strength, and the fact that the English and the German markets are very, very overextended to the downside. Those are really the only bullish things going on right now. Oh, and the fact that Bitcoin's MACD is oversold. Aside from that, every single other thing is bearish. Okay, so just keep that in mind. This week is going to be very, very interesting. In my opinion, it would be amazing if we can start seeing like a short-term rally in the equities. But for that to happen, we need to see breaks of resistance. All right. So until then, just be patient. Follow me on Twitter to get live updates. Make sure to subscribe to the channel, like the video if you guys like what I'm doing here. And I will see you guys tomorrow. Thank you.